Assalamualaikum warahmatullahi wabarakatuh. So today our group 3 will present to you about the application of measurement of interest and hibah in financial institutions. Here are the agendas that we will elaborate to you one by one about the topic that we have chosen. So our group members consist 5 people including me. I will be explaining about introduction and conclusion, while Syafiqah will be explaining Hibah as asset wealth management. Hibah as supporting instrument to IB product and services will be explained by JANNAH. Then interest as the amount of money received for lending out money will be explained by AQILA. And lastly, AZMAN will be explaining about investor and interest rate on investment. I will start the presentation with introduction. So what is a financial institution? The easiest way to understand is a place or a bank where we give or take money for some purpose. So through my research in the internet, a financial institution exists to serve consumers, corporation, or both, with a wide range of deposit, lending, and investing options. So there are a few primary types of financial institutions that I have listed, which are central banks, retail and commercial banks, online banks, credit unions, savings and loans organization, investment banks, investment business, brokerage firms, insurance company, and mortgage companies. As I have explained what is a financial institution, so in Islamic financial institution, for example like RHB Islamic, Maybank Islamic, Bank Islam and more, they use hibah. So how to guarantee it? So in July 31, 2018, Bank Negara Malaysia published a particular reference on the use of hibah as a financial instrument. So as a result, by examining the present practice of hibah adopted by a significant number of Islamic financial institutions today. So what are the types of Sharia principles? Which are lease al-ijarah, kafalah al-rahnu, firm al-sharikah, sharing profits and losses al-mudarabah, and saving al-wadi'ah. So the measurement of interest next. So the measurement of interest rate risk will be pretty basic. Banks will classify interest rate sensitive assets, liabilities, and off-balance sheet instruments based on maturity or specific repricing features. So I have talked about what is financial institution, what is hibah. Now what is interest? The easiest way to say is like you have loaned some money from the bank, so you have to pay it back, but plus interest, which usually like 1.8% from the money you have borrowed. So the measurement of interest rate risk will be pretty basic. Banks would classify interest rate sensitive assets, liabilities, and off-balance sheet instruments based on maturity or specific repricing features. So that's only for the introduction. We will continue to the next point.
So I will present on hibah as asset wealth management. Hibah is defined by Bank Negara Malaysia as a transfer of ownership of an asset from a donor to a recipient without any consideration. Hibah as asset wealth management consists of 3 components, which is parties involved, comprising donor and recipient, offer, ijab of hibah, and also hibah asset. Hibah is considered complete upon the recipient, his guardian in case of minor recipient, or his agent, wakil, taking possession of the hibah asset. By nature, hibah as asset wealth management is a form of benevolent tabarruk contract. Hibah is revocable by donor prior in 2 cases: recipient taking possession of the hibah asset, and fulfillment of condition stipulated in the hibah arrangement in the case of conditional hibah. There are 4 forms of asset in hibah: a tangible or intangible assets, a movable or immovable asset, a share or an undivided interest in an asset, or any other form of asset that meet the requirements. An asset in Hibah must be following in two conditions. The asset must be recognized by Sharia, valuable, identifiable, and deliverable, and the asset must already in existence and owned by the donor. An asset to be received in the future by the donor is allowed to be granted as Hibah, but an asset belonging to a minor shall not qualify as a Hibah asset. Application of Hibah is known in takaful products, where a participant can nominate anybody, be it his family members or other people as his beneficiary, to receive takaful benefits.
The application of Hibah is also portrayed in Al-Quran through Surah An-Nisa verses number 4. Bismillahirrahmanirrahim. وآتوا النساء صدقاتهن نحلة فإن طبن لكم عن شيء منه نفسا فكلوه هنيئا مريئا. Meaning, give women you wed their due dowries graciously, but if they waive some of it willingly, then you may enjoy it freely with a clear conscience.
So the second type of hibah can be referred as the modern concept of hibah, and it is applied as an Islamic financial supporting instrument for the Islamic banking and takaful products and services, and as offered by the Islamic financial institutions. So the hibah is also known as commercial hibah due to its function and purpose as a financial instrument in the Islamic financial system. In general, the practice of hibah as a financial instrument has been permitted by the Sharia Advisory Council of Bank Negara Malaysia by virtue of the Bank Negara Malaysia policy document on hibah, which comes into effect on 31st July 2018. So in pursuant to the policy, the act of giving hibah is always subject to the Islamic financial institutions' own discretion, but must be based on strict conditions specified by Sharia requirements. Aside from that, the hibah instrument has also been used in the takaful industry in two ways, either by way of direct hibah or conditional hibah. In a direct hibah, the takaful company will structure and offer a takaful product to its takaful participants, whereby the takaful benefits will be surrendered to the hibah recipient upon the maturity of the takaful certificate. Under this concept of hibah, the beneficiary of the takaful benefits may be the children of the takaful participant or the takaful participant himself or herself. So this concept of direct hibah covers the educational plan, medical plan, and also other types of plans offered by the takaful company. And of course, this practice is allowed by all Muslim jurists. While the conditional hibah in takaful is made in respect of the nomination of the takaful recipient by the takaful participant during his life as to who will receive the takaful benefits as an executor of his estate or as the actual beneficiary. So this kind of hibah is enforced subject to the occurrence of the event. For example, the death of the takaful participant's death prior to the maturity of the takaful certificate. So the practice of giving the conditional hibah in takaful is seen to be benefiting the beneficiary, since all the payment sum or the benefits received can be directly given to the heirs of the deceased takaful participant without going through the faraid, which is Muslim law administration procedures.
Okay, next I will explain about interest as the amount of money financial institution receive for lending out money. Okay, what is interest? Interest is the price you pay to borrow money or the cost you charge to lend money. Interest is most often reflected as an annual percentage of the amount of a loan. This percentage is known as the interest rate on the loan. For example, if you put money in a savings account, a bank will provide you interest. The bank pay you to keep your money on deposit and use it to make investment in other transactions. On the other hand, if you borrow money to cover a large cost, the lender will also charge you interest. Okay, next, how interest works when lending. Credit score and debt to income ratio are two common factors used by banks to set interest rate. The kind of lending, such as a credit card or a home loan, also counts. Commercial lenders usually add an additional charge for creating a loan with a client on top of that. Okay, next, how banks set interest rates loan. A bank makes money from the difference between the deposit it receives and the loan it makes. The net interest margin, NIM, which most banks report quarterly, represent this spread, which is simply the difference between what it earns on loans versus what it pays out as interest on deposits. Banks set interest rate in accordance with the Federal Reserve rules. They also consider the interest rate charged by competitors when determining whether to provide a borrower a loan. Banks evaluate their credit worthiness, which includes their credit score, income, saving, and other financial factors. Okay, next, Federal Reserve interest rate. The Federal Reserve Bank, also known as the Fed, is the nation's central bank. The federal funds rate, or the rate one bank will charge another for quick overnight loans required to meet their legal reserve mandates, is set by this bank. The Federal Reserve also determines the federal discount rate, which is the fee charged to banks for borrowing from the Federal Reserve. The rates that banks charge for lending products are influenced by these Federal Reserve rates. In general, the Federal Reserve will increase interest rates during prosperous economic times and decrease them during times of recession. Low interest rates encourage customers to spend money rather than save it, which helps to revive a faltering economy. The rates are intended to aid in reduction inflation. Lenders will raise and lower their rates to match the Federal Reserve. An example of loans that will be affected by Federal Reserve rates include auto loans, credit cards, saving accounts, certificates of deposits. Okay, next, how does saving account interest work? Saving accounts are frequently seen as the polar opposite of loans, since instead of borrowing money, customers are giving it to the bank to lend to others. People are frequently given interest on their savings as a perk for keeping them in a bank. The rates will be significantly lower because the bank would be paying customers rather than profiting from their interest. The average annual interest rate is in the region of 1% to 2%. Savings account also have a number of restrictions. It has restrictions on account usage, such as minimum balance requirement. Lower interest rate may be offered on account with fewer restrictions. Emergency funds work best in savings account. Consider investing in a higher yielding savings vehicle to increase the return on savings. The following savings account will raise rate of return: certificate of deposit, retirement funds, money market funds.
Second part of the application measurement of interest is the relationship between the investors and the investment. After this, there will be three types of application measurement of interest through different medium. First, the investment in bank. Second, in stock market. And third, in bond price. First definition is investor. Any person or other entity who commits capital with the expectation of receiving financial return. Second definition is investment, an asset or item acquired with the goal of generating income or appreciation. First is how the interest rate affect investment. Currently, all the financial institutions are following the overnight policy rate (OPR) by at least 25 basis points raised by Bank Negara Malaysia. Therefore, this affects the interest rate all in the financial institution. The first is when the economy grows quickly, it might cause inflation to rise. Therefore, to avoid any factor contributing inflation to rise more, the interest rate is need to set up at the higher. Therefore, when the interest rate is high, people save more rather than spend and bringing the economy to equilibrium. Other than that, high interest rate also affect the borrower, especially the loan with the floating rate, such as house loan. Whereas when the economic growth lags, just as we had experienced during the outbreak COVID-19, the interest rate become lower. Thus, to lift up the economy back, the government normally inject money to the people. Thus, it can simply conclude that up and down interest rate measure the economic situation. Second, how the interest rate affect the stock market. Currently, all the stock market is under pressure. The stock market is affected by many factors such as economic disruption situation, exchange rate fluctuation and more. Therefore, all the causes related might cause the interest rate to spike and thus affecting the stock market and investors sell assets to get profit. Higher interest rates tend to negatively affect earnings and stock prices to drop. Therefore, to avoid risk, investors may consider this as an option. Third is how the interest rate affect the bond price. But first, the definition of bond is a promise by a borrower to pay lender their principal and interest on a loan. Bonds have an inverse relationship to interest rate. Most bonds pay a fixed interest rate and that become more attractive if interest fall, driving up the demand and the price of the bond. But for the current economic situation, its interest rate is increasing and therefore investors will no longer prefer the lower fixed interest rate paid by the bond because the bond price is generally decreased.
So, in a nutshell, in Malaysia, the use of Hibah as a financial tool in Islamic banking or any financial institution and takaful products and services is fully recognized and allowed by the law. So, in takaful, the conditional Hibah can be only enforced to be beneficiary if an event occurs, such as the death of the takaful participant. Next, the monetary charge or the privilege of borrowing money is known as interest, and it is typically expressed as an annual percentage rate APR. The amount of money received by a lender or financial institution in exchange for lending money is referred to as interest too. So that is all from us from Group 3. Thank you for watching this video.